Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. This video is going to focus on the ASX200. I'm also going to have a look at latest developments in gold, so make sure you stick around for that. I'm going to cover the S&P 500 in a separate video, and I'll leave a link for that in the description section below. As always, this is general commentary and doesn't take your personal situation into account. All of that said, let's get into our first chart. So we have the ASX200 up on the screen, and ASX200 has really held together quite well over the last week. My focus over the last, I think it's been the last 3 weeks now, has been for the potential for a pullback and a consolidation after this strong rally we had off the lows back in September. So this was a 15% rally in 2 months, and what that did, the market got quite stretched above these moving averages. So the point which I've been making is the market stretched above the moving averages and often pulls back towards them, often retests them, and that's what we've been seeing take shape over the last couple of weeks. These moving averages are now getting quite close to where the ASX 200 is actually trading. And that's often the case. Big rallies need to be checked. That's the case now. And we've also got this resistance band. Comes in around 7,200. You can see it's been technically active region going back to around April last year. And whilst not a perfect fit, it has overshot on this occasion, as it has overshot back here in February. And got a little bit of an undershoot last 21 and broke through and then back through there. So it's not a perfect region, but it does show there's areas where the market does tend to find support and resistance, and that's what we're seeing now. I think it remains a case of watching how this pullback continues to develop. And for me, it's also just about focusing on the individual stocks and looking for the individual stocks with positive setups. Whilst we do have the market in this broadly positive phase, it's I don't think it's a case of buy anything. I think it's being selective and looking for the stocks which are trading above their moving averages and which are breaking out to new highs. And it's also interesting to have a look at the ASX 200 Equal Weighted Index. So of course the ASX 200 is capitalized weighted, so BHP being the biggest stock has the most influence. When you look at an equal weighted index, each of the 200 stocks are weighted the same. So the smallest stock moves the market as much as the biggest stock. And what's been interesting with this is we had this breakout from a trend line. That was back in mid-November, around the 11th of November. This trend line going back to January. 3 points in the trend line, so a significant trend line. So we had the breakout above that, which was the first positive sign maybe this market was starting to try and turn around. Initial rally, and then we've had the pullback. And that's often what you get when you get a break from a trading range or a breakout of a trend channel. You get what we call a return move, where it comes back and tests around that point where the breakout was. So you can see that today's low, Friday's low, pretty much around that breakout point. Also coincides with where these moving averages are. Moving averages have crossed and turned higher, so some positive signs there. What's been interesting, if you just look at today's price range, so this is where the market is closing. It's close to near the close, so it's almost 3 p.m. Sydney time on Friday afternoon, and the market is getting up near its high for the day after breaking to an interim low, breaking to a low during the day, and then strongly rebounding. What's interesting, though, is that this is a day when the US market is down something like 2% overnight. So the fact that the equal weighted index, and we're seeing the same sort of price action in the small ordinaries as well, the fact that it's been able to sell off, rebound on a day which often would have resulted in significant and sustained losses, I think is an encouraging sign. And it's also behaving quite differently to what we saw during August and September. So you can see these down days that we had during August and September, they closed near their lows. These are market days when the market is closing down near its lows. Quite different to what we're seeing at the moment. So the type of price action we're seeing now is a lot more encouraging than what we had just several months ago. I think that if this market, if the equal weighted index and the S&P 200 generally can continue to consolidate around current levels, well, then the next target does become this resistance area up around 18,000, or around 1,830, 1,830. And you can see this dates back to December 2000, where there's been some activity around this level. Not perfect by any means, but a lot of resistance levels aren't. We can just see this is an area of consistent activity from the market where it does tend to get reaction points. So this will be the area to watch if the market can consolidate these gains and then try and push higher. So for me, it remains a case of holding on to the positions I have, the individual stocks that I have that remained in their broad upward trends, and looking to buy stocks which are above their moving averages and making new highs. And I'm also still got plenty of cash on the sideline, so it's a case of moving forward cautiously, but moving forward. I think that's the key part. It's not just bunkering down and waiting for the worst, because often the worst doesn't happen and you're left in the bunker while the world moves on. We don't know what's going to happen, but it's about treading cautiously forward, using momentum we have it to try and guide and manage our decisions. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It tells YouTube that people are watching, and then YouTube shows more people, and the whole thing then starts to work, and I make the videos. And so please do that. Hit the subscribe button if you haven't already, and visit me over at Motion Trader, because I've got the big Motion Trader Christmas special on at the moment. If you're registered on my website for any of the free services, you would have got an email from me. I'll put a link up on the website as well. It's one of the great chances to get into the service at a great price. No gimmicks, no watches or iPads or any of that stuff. It's just, for me, look, it's just I think it's a great service at a terrific price. So come and have a look if you're interested in the stuff that I do. Now, let's have a look at gold. Let's move over to gold, because that's been also very interesting this week. So last week, you'd remember I've been talking about, probably the last couple of weeks really, I've been talking about a pullback. So often when a market goes from below its moving averages, charges higher, crosses above the moving averages, we get a pullback. We did get an initial pullback in November, then a quick rally, and now we've got some more consolidation going on. So that's all very normal stuff that we often see in what could be a developing trend. I think the overall structure remains positive. These moving averages have now crossed. The 50-day average is above the 100-day average, so that's a positive sign. And but there still remains a possibility that this does continue to consolidate in the near term. But I think at the moment we've got to say this is looking encouraging. It's the best gold has looked for. Look, you've got to go back over here, back to February, find a time when gold has looked as at least as promising. Looking at some of the gold stocks is also an interesting exercise. Really interested how they've traded today. So this is Evolution Mining on the screen now. Like I was saying with the equal weighted index, gold lost some ground last night. So gold had some selling last night. Evolution opened down a few percent at the open, sold a bit more, but now it's looking like closing the day up near its high. So that's positive, and I'm seeing the same sort of price action amongst the other gold stocks as well, like Northern Star and Newcrest. They've got the same sort of price action today. These moving averages are also close to crossing, so it starts to set up a structurally more positive chart than we've had for most of this year, Evolution and gold stocks generally. It's I like how they're looking generally. I have exposure to the gold stocks, and I'd like to get some more, but I'm also mindful that they're not as stretched above the moving averages as they were. It has come back a bit, so that's positive. But I'm also just wary not to get too enthusiastic about gold stocks too quickly, because they do have the tendency to be quite volatile in the way that they can pull back after these initial runs. There's also some resistance, which is it's still a bit ahead of the market, but you can find this on all the gold stocks. So just putting some in on evolution. So this comes in at around $3.40. So that's what the market has ahead of itself. So if the market were to quickly rally back up, you'd expect to get some resistance above current levels. And you see the same thing on Northern Star. Well, so there's some resistance I've already got drawn in that comes in around $11.80. So again, you got this positive price action today, opened low, traded lower, closing higher. So that's good. Still a bit above those moving averages, so there's still the potential of some consolidation. So I like this sector. I think it's one which I want to have exposure to. It's now looking at the right timing, trying to get the right timing in place to add to existing positions. Now, I'm just going to have a very quick look at uranium. I haven't looked at this for a couple of months. A couple of months ago, I was talking about uranium, and round maybe it was around August. I was talking about the point I was making there was uranium had a big run over look, it was about a 2-year period, put on a lot of upside, and big upside often takes a lengthy consolidation. And my thinking at the time was this enough consolidation? Was that enough consolidation during June, July to correct a move that had lasted for a couple of years? And I thought probably needs to do more work. Been watching how uranium's been trading over the last few weeks. It's below the moving averages. The moving averages now crossed the downside. I'm not getting bearish on uranium, but it just makes me wonder, maybe the time is not right. Maybe it's not ready to run yet. Maybe it's going to take more time. I know there's a lot of people talk about uranium like it could be the new lithium. Maybe it will be, but it could take time. And of course, it may not even happen. Just interesting, have a quick look at it on a weekly chart, and you can see, so we've had the big decline, big period of sideways doing nothing, and then we've had this sharp rally up over a 2-year period. Now, what could happen, one possibility is, and this isn't a prediction, this is just a possibility of how these things can play out, is that this consolidation takes longer to work through, and that it does work through, and that we do get these big breakouts, which a lot of people are saying could happen, and a lot of people say will happen because of all these supply and demand dynamics of the uranium market. But if something like that were to happen on that sort of scale, this is out in 2024. It's potentially another 12 months of consolidation to work off this big rise. Maybe not. Maybe that doesn't happen. Maybe it's closer than I think it could be. But I am prepared that big moves take time. They take time to initially run. They take time to consolidate. They take time to run again. Just look at what copper's done over the last 18 months or so after big moves. They take time. So if you're in uranium, you like uranium, I think just be prepared for patience, because this price action doesn't look like it's ready to run. It may take a little bit more work, a little bit more time. So let's leave it there for this week. Hopefully that's been interesting. Hopefully you get some good ideas from that. And please hit that like. I look forward to coming back, talk to you next week. Until then, bye for now.